Hey everyone, welcome back to Income Nomad, your channel. Today I want to introduce you the top 3 trading tools which you can use to elevate any trading strategy to another level and earn more money online day trading. And the last one is the most important one, so make sure to stick around until the end. Believe me, you won't regret it. Right. So picturing into your trading chart, and with just a few clicks, you have this remarkable indicator, the average sentiment oscillator, developed by this amazing author. This oscillator is like having a crystal ball for market sentiment. It literally tells you if the market is feeling bullish or bearish at any given moment. So let's break it down. Those red and blue lines dancing above and below the center line. They're your ticket to understanding market sentiment. When the blue line triumphs over the red, it's a bullish bonanza. Prefer Jack or Mover. When the red line takes the lead, brace yourself for bearish vibes. It's like having the pulse of the market right at your fingertips. But hold up, here's where it gets really interesting. While this indicator is a gem, it's not without its quirks. Have you ever spotted a signal that led you astray? Those pesky false alarms can throw a wrench in your trading game. But fear not, my friends, because I've got the solution. By tweaking the indicator settings and adding a dash of finesse, we can smooth out those rough edges. Welcome aboard our crypto arc where dreams meet freedom. Join us on this journey as we empower crypto believers with knowledge and tools to achieve their goals. And guess what? We're just getting started in this world of endless possibilities. Click the link below to join us now. Enjoy 0 fees on spot trading for the first 30 days and a chance to win up to 30,000 USDT in deposit rewards. Join Bybit today and ride the wave of crypto success. And just when you think it couldn't get any better, enter the Andean Oscillator, crafted by the genius mind of Alex Grover. I made a bunch of strategies based on this powerful indicator previously, which you can find the links just before the end of the video. This bad boy acts as your wingman, filtering out those false signals and guiding you toward the most profitable trades. Spot a bullish signal on the Andean Oscillator with the green line proudly leading the charge. That's your cue to dive into a long position, riding the wave of market optimism. And when bears come knocking, the red line takes the spotlight, signaling the perfect opportunity to go short and seize those profits. Now let's see just a part of 100 times back testing this strategy, following with the results right after that. But hey, let's keep it real. Trading isn't all sunshine or rainbows. There will be losses along the way. That's why I swear by the perfect money risk management strategy, a rock solid risk management strategy that's a game changer for any trader. You're probably aware of how crucial volume is in technical analysis. Some traders even argue that volume is more important than price itself. Now, there are various types of volume indicators out there, but the one I'll be talking about is the basic yet widely used version. You might already be familiar with it. It simply displays the volume for each period using bars. Looking to step into the world of trading? Look no further. Introducing FP Markets, your ultimate trading destination. With a stellar reputation since 2005, FP Markets stands as a beacon of trust in the financial world. Regulated and reliable, we're your gateway to success in CFD and Forex trading. Imagine accessing a comprehensive suite of trading products all from one single account. With FP Markets, it's not just a dream, it's your reality. FP Markets has transformed my trading experience. I can diversify my portfolio effortlessly. Their platform is intuitive and user-friendly, making trading a breeze. Don't miss out on this opportunity to elevate your trading game. Click the link above or in the description below to sign up, join the FP Markets community, and start your journey to financial success today. FP Markets, where trading dreams become reality. Many traders, including myself, often complement this volume indicator with a moving average line. This combo provides a more nuanced evaluation of volume, helping you determine if a candle's volume is above or below the average. This basic volume indicator is handy for gauging how bullish the candle is, but it has its limitations. What's missing here is a measure of the strength of each bar relative to the others. It's not enough to know if a bar is above or below the average. We need a way to assess the varying degrees of bullish or bearish strength. Fortunately, there's an indicator that addresses this issue. Let's head over to the indicator section and look for the heat map volume. It's an extra special indicator crafted by this amazing scripter. Thanks to him or her, by the way. Now take a look at this. It appears below the chart, and if you compare it with the basic volume indicator, they seem identical. However, the new one introduces different colors which have meaningful implications, unlike the basic indicator, where colors merely match candle colors. These colors represent different levels of traded volume. The calculation is based on the standard deviation from the average volume. In the indicator settings, you'll find the multiplier for standard deviations like 4, 2.5, 1, and even a minimum of 0.5. Each color signifies a special level of volume. Red for extra high, orange for high, yellow for medium, light blue for normal, and dark blue for low. Turning off the colored bars lets you analyze candles without distraction. Now, each color provides insights into the degree of volume. Pay close attention to red, orange, and yellow bars as they signal a significant increase in volume. For instance, during a flat market, an orange bar might indicate a strong move, potentially signaling a breakout. The higher the degree of the volume bar, the more crucial it is. Red bars in particular often precede substantial market movements, indicating heavy participation from institutional traders. By categorizing volume degrees through moving averages and standard deviations, this indicator enhances your ability to evaluate bullish or bearish strength in the market. It's a valuable tool for making more informed trading decisions, especially when you're seeking confirmation through volume analyses. The moving average convergence divergence, also known as the MACD, is one of the simplest and yet most popular indicators used by traders. Essentially, a trend following indicator shows the relationship between two moving averages and other aspects. So first, let's apply it to the chart. What you want to do is go to the indicator section, type in MACD, and click on this one here. Before we start, we first need to know how the MACD works. To put it briefly, we can see here there are four components to the MACD. First, we have these two lines, the MACD line and the signal line. Notice the difference between the two. The MACD line moves faster and is more sensitive to price changes, which will be the focus of the MACD indicator. Compare that to the signal line, which reacts slower to price changes, therefore giving it a smoother appearance. Next, we have the histogram, which represents the difference between the MACD line and the signal line. For example, if the line crosses above the signal line, the histogram will turn green, and if it crosses below, it will turn red. The gap between the MACD line and the signal line also affects the size of the histogram. As you can see, if the two lines are further apart, the histogram gets bigger. And if the two lines get closer, the histogram becomes smaller. Finally, we have the zero line, which simply represents the center of the MACD indicator. Now, the way traders utilize this indicator to identify momentum is by looking at the crossover between the MACD line and the signal line. Let me show you an example. If the MACD line crosses above the signal line, it indicates that the market is on an upward momentum, and if it crosses below, it indicates that the market is on a downward momentum. I know that probably less of, these kinds of concepts and stuff. I'm just pointing out these for those friends of ours who are a little bit more rookies in the market. Traders can also utilize the size of the histogram to determine the strength of the momentum itself. If the MACD crosses above the signal line while the histogram is getting larger, it shows us that the upward momentum is getting stronger. Similarly, if the histogram is getting smaller, it indicates that the upward momentum is getting weaker. As we have already established that the MACD is based on moving averages, so the question is why you should use the MACD and not the moving average. Well, let me give you a quick comparison here. So here we have the MACD is set to its default settings, 12 and 26. And over here, we also have two exponential moving averages, which are set to the same values as the MACD 12 and 26. Notice the correlation between the two indicators. So every time we have a crossover in the moving averages, we also have a crossover on the MACD, but it's between the MACD line and the zero line. But remember, what we look for in the MACD is not the zero line, but rather the crossover between the MACD line and the signal line. And so as you can see, the crossover and the MACD, a much earlier entry signal compared to the crossover on the moving average. That's why I prefer it as my momentum indicator. Now let's talk about the different strategies that you can use with the MACD indicator. So first, a common mistake that traders make is that they're using the indicator by itself. Let me show you why it's a bad idea to use the MACD alone. Here we can see that the overall market is in a downtrend. However, the MACD is crossing over upwards. The MACD is indicating a bullish momentum, but the market is in a downtrend. This is exactly why you should not use the MACD by itself, because what the MACD is showing us is only the shorter momentum as traders. We also need to consider the long-term trend because we never want to trade against the trend because we don't have the power and the money to do that. But high win rate strategy that I recommend for beginners is combining the MACD with a long-term trend indicator like the 100 EMA. This way we can safely trade the MACD while making sure that we are staying in the same direction of the long-term trend. This is how you trade. The strategy, the first step is to identify the long-term trend by looking at the 100 EMA. If the price is above the 100 EMA, it indicates that the long-term trend is up. And if the price is below the 100 EMA, it indicates that the long-term trend is down. Yes, once you have identified the trend, the next step is to look for crossovers on the MACD that show the same signal as the long-term trend. For example, if the long-term trend is bullish, we only take signals when the MACD crosses over upward. For risk management strategy, you can place your stop loss at the nearest swing low and set your profit target at a 1.5 to 1 risk reward ratio. For advanced traders who want to increase the win rate using the MACD, relying on crossover techniques alone may not be sufficient. In trending markets, crossovers work well, but in ranging markets, they can give false signals. To improve the win rate, you can combine the MACD with price action. In this advanced strategy, you choose a time frame and identify a key level within that time frame. You wait for the price to approach the key level and confirm the reversal using the MACD indicator. One trick is to break the chart into 2 time frames down and wait for the MACD to cross over downwards in the smaller time frame for an earlier entry signal. By combining the MACD with price action, you can get more precise entry signals and increase your profits. These are high win rate matching strategies that you can use right now. unlock your trading potential with FundedX. If you're ready to elevate your trading game to new heights, look no further than Funded Next, the ultimate platform for promising traders worldwide. Trade up to $300,000 on a Funded Next account and earning up to 95 the profits. Sounds enticing, right? But that's just the beginning. With Funded Next, you're not just trading. You're paving your way to success alongside a community of over 81,000 funded traders spanning across 195 countries. What sets Funded Next apart? Let me break it down for you. Profit sharing from challenge phase, profit sharing right from the get-go. Yep, you heard it right. We're the only prop firm offering this, giving you that extra push to reach the top. Say goodbye to trading under pressure. With Funded Next, you trade at your own pace with no deadlines hanging over your head. Trade with peace of mind thanks to our intelligent drawdown calculations. No unnecessary stress, just smooth sailing towards your trading goals. Enjoy the best trading conditions in the game with Funded Next. You get raw spreads and the lowest commissions, ensuring every trade works in your favor. Guaranteed payouts. Worried about when you'll get. Don't pay with our 24-hour payout guarantee. Your earnings will hit your account within a day. And if we ever miss the mark, we'll top up your payout with an extra $1,000. Ready to embark on your journey towards trading success? Join Funded Next today and unleash your trading potential like never before. Contact us now to kickstart your adventure. Don't miss out on this opportunity by clicking the link above or down in the description to be part of a dynamic community shaping the future of trading. The world of trading is yours for the taking. Seize it with Funded Next. Now, to my surprise for you, previously, I made 2 videos about the fact that how you can come up with tools better than both MACD and moving averages. And if you want to check them out, don't hesitate. Those are just these 2 videos here. And if you are into more videos like this, you can also check out my other videos as well. If you found some value in the video, all I'm asking in return is for you to invest 2 seconds of your precious time into liking the video, subscribing to the channel, and sharing my video with your friends. It takes only 2 clicks, but it means so much to me. Thank you guys for watching, and I'll see you in the next video.